Today, I'm going to talk about taxation of special cases, focusing on banking institution in Malaysia. Now, instead of just explaining everything seriously, I will use simple example and short acting scenes to help you understand better and to make this presentation more interesting. So, let's begin.
What is a banking institution? A banking institution is a company licensed under Malaysia law to accept deposits and provide loans or financing. Examples include commercial banks, Islamic banks, and investment banks. Commercial bank, a financial institution that accept deposit and provide loans and other banking services to individuals and businesses. Example, Maybank, CIMB Bank, M-Bank, Hong Leong Bank, RHB. Islamic bank, a banking institution that operates in accordance with Sharia principle where income is generated through profit sharing and trading activities instead of interest. Example, Bank Islam Malaysia, Bank Muamalat, RHB Islamic Bank. Investment bank, a financial institution that provides corporate finance services such as capital raising, underwriting and advisory services. For example, Maybank Investment Bank, Affin Hwang Investment Bank and Kenanga Investment Banks.
Hi, I would like to apply for a personal loan. Sure, we provide loans with interest and Islamic financing as well.
This simple interaction already shows how banks earn income and that income is taxable.
Now, let's talk about tax rate. Banks in Malaysia are taxed at a flat rate of 24%. Unlike small businesses, banks cannot enjoy SME tax rate even if they make lower profits. This is because banks are considered large and important financial institution. So remember, bank equals 24% always.
Next is sources of bank income. Banks don't earn money from selling products like clothes or food. They earn income mainly from money itself. First, interest income. This is the biggest sources of income for conventional banks. You borrow 100,000 ringgit and you will pay interest over the loan period. That interest is income for the bank and yes, it is taxable. Second, Islamic financing income. Islamic banks don't charge interest, but they still earn profit through Sharia compliant financing.
If there is no interest, does the bank still pay tax?
Yes, our financing profit is still taxable under income tax law.
Wait, Islamic bank don't charge interest, right?
Correct. We earn profit through financing like murabahah.
Even though it's not called interest, the profit is taxable. The third one is fees and commission. Bank also charge service fees, processing fees, late payment charges.
Why so many charges?
All these charges are income and they are fully taxable.
Now, let's talk about expenses. Banks can deduct expenses that are necessary to run their business such as staff salaries and bonuses, office rent and utilities, IT systems and banking software.
We need stronger system to manage customer data and security.
All these costs help the bank operate, so they are allowed as tax deductions.
Next, bad and doubtful debts. First, specific provision allowed. If a customer clearly cannot pay back a loan, the bank can make a specific provision. This is a real loss, so it is allowed for tax deduction.
Ini adalah peti simpanan.
This customer has default and cannot be contacted.
Second, general provision not allowed. But if the bank just estimate losses for all loan, this is not allowed for tax purpose.
Next, zakat for Islamic bank. Islamic banks are allowed to deduct zakat from their tax payable. However, it is limited to 2.5% of aggregate income.
We must fulfill our zakat obligation and also comply with tax regulation. Yes, we do.
This encourages Islamic banks to fulfill both religious and legal responsibilities.
Next, withholding tax. When banks pay non-residents, withholding tax may apply.
Hello, please transfer my service fees now.
Before paying, the bank must deduct withholding tax and pay it to LHDN. If they don't, penalties applies.
NETS, estimated tax, and CP204. Banks must submit estimated tax payable known as CP204. They don't wait until the end of the year. They pay tax monthly. This keeps tax payments organized and consistent.
Last but not least, tax audit and compliance. Banks are often audited.
Please show your tax record. Here. Alright, thank you.
This is why banks must keep proper documentation at all times.
We use this real-life case about banking institution from LHDM website.
This case involved Malayan Banking Berhad, one of the largest and most established banking institutions in Malaysia, and the Director General of Inland Revenue. The dispute arose the LHDNM issued a tax assessment against Malayan Banking Berhad, which the bank disagreed and subsequently challenged through the judicial review process. The bank argued that the tax assessment imposed by LHDNM was not in accordance with the law.
The main legal issue in this case is whether the Director General of Inland Revenue had acted lawfully and within its power under the Income Tax Act 1976 when issuing the tax assessment to a banking institution. This case is considered a special transaction case because it involves a banking institution with complex financial operation and large-scale transaction which require careful interpretation of tax law. Due to the significance of the issue involved, the case was escalated to the Federal Court, highlighting its importance in Malaysian tax jurisprudence. Furthermore, the decision in this case is important as it provides guidance on the relationship between tax authorities and banking institutions, particularly in terms of compliance tax assessment and the limit and administrative power exercised by LHDM.
In conclusion, this case clearly falls under the topic of taxation special case, banking institution, as it demonstrates how tax law are applied to banks and the legal challenges that may arise when disputes occur between financial institution and the tax authority. Before completing the assignment, we are initially struggled to understand technical areas such as bad and doubtful debt and withholding tax, especially when referring to the Income Tax Act. This challenge made me realize that our inner lies in interpreting tax legislation.
Through the assignment, we improved our research skill and learned how to apply tax rules to real-life banking scenarios. Professionally, this topic is important for our future career because we may be involved in advising financial institutions. Understanding this rule help improve our professional judgment and prepare us for real practice.
Before this assignment, I lacked confidence in explaining technical tax concepts, particularly those related to banking operations. During the research stage, I found it challenging to simplify complex tax rules into understandable explanations. Through collaboration with my group members, I improved my communication and presentation skills. I learned how to explain technical information clearly without oversimplifying it. This experience has motivated me to continue improving my professional communication skills, as I believe clear explanation is essential in the taxation and auditing profession.
This assignment taught us that taxation is not just about memorizing rules, but understanding their application in real-life business environment. Working in a group improves our teamwork and communication skills as we share responsibilities and coordinate our ideas effectively.
Moving forward, we are planning to continuously update our tax knowledge and improve our ability to explain complex tax matters clearly. In conclusion, taxation of banking institution has involved special rules due to the nature of banking operation. This assignment has increased our confidence, awareness, and readiness for our future personal careers.
To conclude, banking institutions are taxed differently because of their unique role in the economy. They are taxed at 24%, have special rules for bad debt, zakat, and withholding tax, and must comply strictly with tax regulation.
We hope this explanation with examples and acting helps you understand the taxation of banking institution better. Thank you for watching.